Welcome back, BFX community. Well, we talk to extraordinary people and we talk to people that have been in extraordinary situations. I'm talking to someone from an extraordinary family today, an extraordinary man himself in his own right with business, and someone who had a very, very extraordinary father. I'm talking to Tim Lincoln from Lincoln Indicators, which we'll get into a little bit later. We're going to talk to Tim about his business achievements, but we're also going to talk to Tim about his father, Merv, who was a world record holder at one stage. Tim, thanks for joining the Bearfax today.
Yeah, no worries, Ross. Great to be here. Thanks for inviting me.
So, Tim, let's go back. Your father, Merv, was quite a good runner. That's a bit of an understatement, isn't it?
He wasn't bad.
All right.
He could tear up the old, well, back then it was the grass track at the MCG and around the globe. Now it's more synthetic tracks, but no, he was a very capable athlete, that's for sure. He ran in a couple of Olympic Games, Rome 1960 and Melbourne 1956. He was red hot favourite to win the gold medal for the 1500 metres. In Melbourne in 56, and at the time, break form for the mile. That was the event in the world. At the time, it was thought to be humanly impossible. Then Roger Bannister came along from the UK and did that, and then the race was on for others to do it. And Dad was the second guy behind John Landy, and the seventh in the world to break 4 minutes for the mile on the eve of the Melbourne Olympics, almost. So, Dad at the time. Dad was red hot favourite. He was the current. He'd run the fastest time in the world for the 1500 metres leading into Melbourne Olympics. And had he won gold in Melbourne, he would have been folklore today. It would have been probably the greatest achievement in Australian athletics history. But in his semi-final, unfortunately, he injured his Achilles and calf, and was on the massage table all night prior to the final. And the doctor, who was meant to administer cortisone injection, came down. He was meant to come down now before the race to administer the injection, but only got caught up in the emotion and the vibe of the leading into the greatest event of the Olympics, being the 1500, and got down there 5 minutes before the race. Dad he wasn't mentally prepared, just hadn't got himself in the mental condition that he needed to run a race to that elite level. But so it virtually scratched himself, but the doctor administered the injection. Everyone had lined up on the starting line. Dad then ran out late, got there, managed to lead into the bell lap. So in front of 100,000 screaming fans, led into the bell lap at the MCG, but unfortunately broke down on the final stages of that final lap to run last. So that obviously hurt Dad enormously. You know, all the training, the preparation, the build up, the pressure, the everything that went with that to not get that gold obviously hurt him, but it sort of inspired him also to achieve greater things in life. More on that, I'm sure, a little later. Then Herb Elliott came on the scene, and the rivalry between Herb and Dad for the next 4 years was massive. You know, Dad never beat Herb. He ran second to Herb Elliott 22 times, and Herb Elliott is regarded as the greatest athlete in Australian history. But if not the greatest athlete, then certainly the greatest 1500 metre runner of all time, probably, who won gold in Rome. But by Rome, Dad was sort of cooked. Back in those days, it was purely amateur. So he wasn't earning any money, travelling the world, but the rivalry was massive. Yeah, 22 times to Herb. So Dad, had it not been for Herb, Dad would have been the greatest 1500 metre runner of all time. But, you know, as I said, that inspired him to greater things. And that's just a quick, well, it wasn't really a quick summary, was it? But a quick overview as to the elite athlete that Dad was. Yeah.
Well, so let's have a look at a couple of the surnames that ran when your father did. There was Landy, Elliott, Ron Clark. Your father held the world record in 1958, 1,500 metres. And you mentioned Herb Elliott as one of the greatest athletes, if not the greatest 1500-meter runner. I'll just read something for you. Merv was gentle and polite, well-mannered and considerate, but tough enough to drive himself to the full extent of his physical limits. Of all my competitors, he was the best. That was Herb Elliott for your father's eulogy. That's pretty a fair compliment, really, isn't it?
Yeah, and yeah, it's a great compliment, absolutely, and yeah, it was read out at Dad's eulogy by John Landy.
Oh, John Landy, sorry, I
Yeah,
apologise.
yeah. Herb wasn't able to attend the funeral, but he sent that through. But back in those days, they all were gentlemen. You meet anyone from that particular era, whether it be male or female, and they were beautiful human beings. They were so humble, they were so gracious, and respected each other enormously. And it obviously wasn't about the money; it just had to be about the passion and the drive and the respect for one another. Dad certainly did adhere to those personality traits for sure, and a defined set of values too, Ross. But genuine, natural, organic values. Mm.
Well, and that statement within itself, or that paragraph that I just read out, it is a compliment to people like your father and also yourself that keep the humility, but not aggression, but any determination is all focused on the effort of the achievement, isn't that? No bluff or bluster. It's all on the actual task itself.
Yeah, it's being able to channel that energy into a pure passion and giving your all. But the outcome, it's selfless. So that's where the humility piece comes in. It's selfless. It's all about, I don't know, providing entertainment to others. What can others receive from this effort that will benefit them and add value to their life? And in their case, it was entertainment. At the end of the day, it was for others to witness this thing that was perceived to be humanly impossible, and to go on that mission and to entertain and provide relief from so that was on the foothills of the Second World War, and so people were seeking a united front of achievement globally, and that's what they were providing. So it was pretty special.
So speaking of benefiting others, 1983, your father completed his PhD, and
82 actually, Ross,
82.
just 82. Yep.
And it has had a major influence on the business world, and it led to an organization, a company that you and he have put together, and it's gone for 30 years. Can you tell me about how Lincoln Indicators started and what it's about?
Yeah, you summarise it quite well there. Yeah. So yeah, Dad completed his thesis in 82 while he was senior lecturer of and headed up the economics and finance faculty at Melbourne University. So yeah, he completed his PhD, and his PhD was all about using accounting ratios to describe the insolvency risk of companies. So at the end of the day, let's articulate that in a more understandable way and narrow it down to the financial health of a company. So his PhD developed a way to measure the financial health of a company, good or bad, and full diagnosis as to the reasons why it's good or bad through the use of accounting ratios. So that was Dad's brilliance. Professor Ed Altman in the US, who's famous for the Altman Z score, he was the only person in the world who could relate to Dad's brilliance, and he marked it and approved it. And so Dad then decided to leave the Melbourne Uni in 84 and go out and lecture his theories to the corporate world. Now, that was before computer technology had really taken hold. Sorry, it was all mainframe card readers at the time, so it was very much theoretical. So teaching the corporate world how to avoid credit risk and lending risk by understanding the health of the company. So don't lend someone money or issue credit or offer a contract under a large procurement arrangement. make sure that they've got the financial viability and capacity to meet their commitments. So that was quite groundbreaking in the commercial world. So Dad did that. Meanwhile, I was off overseas contracting my computer skills to various organisations and learning my craft. While Dad was out there consulting to large corporate organisations. And then I returned from overseas in 1991 and having dinner over with Dad, Mum, and I must applaud Mum in regard to her role in supporting Dad on all of his endeavours and everything. So Mum's played a critical role. It seems to be a little bit Dad-centric at the moment, so let's just weave Mum in there for the kudos she deserves as well. Anyway, so God love Mum. So yeah, I returned from overseas in 91 and Dad passed his PhD across the dining room table and suggested to me that, or invited me to consider actually computerizing his PhD and commercializing it, because PC-based applications and hardware were now available to help us to commercialize his particular intellectual property. So that was exciting. So PCs were there as a vehicle for distribution of his knowledge. So that was a really positive conversation. And might I add, when I was 12, when Dad was writing his PhD, so some 10 years beforehand, we were having a barbecue at home, and Dad had sown the seed of thought in our subconscious minds that when he was working on his PhD, perhaps one day one of you kids, and I've got two siblings, a brother and a sister, both older, perhaps one of you kids could one day do something with this work. And it was there, and I listened at the time, but then it got tucked away in the subconscious mind. And then when he presented the opportunity, the idea of commercializing and computerizing his work, it obviously came through into the conscious mind. I thought, I remembered this thing. I've been carrying it with me forever. And now is an opportunity to actually do something with it. So it was incredibly exciting, incredibly honoured. And of course I jumped at the opportunity. But yeah, it was 5 years of hard work to computerise and commercialise with nothing. Dad refused to take on debt. I respected that enormously. And we then morphed from a corporate tool. During our research and commercialisation, we had our own self-managed super fund, and we identified that just investing in high financially healthy companies with good leaders and a couple of other metrics, that we're actually producing good returns in our self-managed super fund. So therefore, that then created this idea that perhaps we could provide this tool to DIY investors and self-managed super fund trustees to actually make more confident and informed decisions by understanding the financial health of a company before they invest in them. And therefore, the commercialisation piece changed tack a little bit, and we decided to go down that direct retail market, the self-managed super fund, high net worth individual, DIY investor. And that's where Stock Doctor was born. And so in 1996, after 5 years of toil and building and no debt and just having to build it organically, and I had to go from computer geek to entrepreneur somehow. That was a difficult transition, get out there and sell stuff. Hey, I'm just used to sitting behind a computer and programming. Stock Doctor was born, and off we went. And here we are today.
How many members in Stock Doctor?
Yeah, we've grown organically, really referral based, Ross. So we don't get out there hard and market it really broadly. So we've got around 4,000 Stock Doctor members with a really, really high retention rate. We just want to provide exceptional customer service and product. And the way we can sustain that is by keeping it reasonably tight. However, I will look to scale globally in the not too distant future, but we still need to maintain that high customer centric focus. So that can't be diluted. So we've got to figure out how to do that. But 4,000, we've also got managed funds. So for those that believe in our methodology and approach, but don't have the time, desire, or inclination to use Stock Doctor and do it themselves, then we manage money, both in Australian growth and income funds and US funds, adopting exactly the same approach as what the DIY investors would use the Stock Doctor platform for. And we've launched our first managed fund, the Australian Growth Fund, in 2003, and all up currently managing around 800 million of client funds, and most of that money comes from the loyal and trusting Stock Doctor member. So all organic, all very much organic.
So you've got someone who wants to manage some stock. You guys have 9 rules.
Yes, 9 golden rules.
Yeah. Can you just tell us about the first, I think it's the first 1 to 3 rules that are really important, and they're the ones that they sort of set the tone for the stocks that you guys include. So you have star growth stocks, star income stocks, and you have star borderline growth stocks. Can you just let us know a little bit more about how you guys work that out and what they are?
Yeah. So in order for us to launch that DIY product being stocked, in order for us to launch it, we couldn't just rely on financial health, because out of the 2,000 listed Aussie stocks, there's about 300 that are financially healthy and about 1,700 that aren't. So 300 just too big a portfolio. And we wanted to sort of optimize returns. So what other factors might exist out there that we needed to combine with financial health, which is golden rule 1? So that's non-negotiable. That's the screening tool that gets you down from the 2,000 to the 300. That's the financial health. So number 1 rule, critically important: company not at risk of failure, financially healthy. Then what were other correlating factors with financial health that could increase the probability of positive share price performance? So then another lot of research had to be undertaken, and we're constantly optimizing and identifying factors relative to different changing economic environments through now machine learning and AI technologies that we incorporate into our whole methodology piece right now. But what are those factors? And from a star growth stock perspective, you've got to find the growth factors that combine with financial health. Things like return on equity was a high correlator, profit margins, high correlator, revenue growth, high correlator, earnings quality. So what's the quality of their earnings on the balance sheet that are sustainable, reoccurring, and got a really strong economic moat around them? They're basically the factors for golden rule 2. And then golden rule 3 is, are those factors sustainable into the future? So what's the outlook and forecast? So then we've got to model up and look at consensus data that's available. What do those growth metrics look like into the future? And then overlay that with some qualitative assessment. So all of it so far has been quantitative, so all very much data driven. Then a qualitative overlay at the end of golden rule 3, where our analysts then lift the hood up a little bit more and just check out management and the sustainability of the business model, and are there any other active risk, geopolitical or macroeconomic, that might then affect the company going forward. So really thorough process there under golden rules 2 and 3. From a growth stock perspective, from an income stock perspective, very similar. What are the income metrics that we look for? And that's margins in free cash flow, growth in free cash flow, to make sure that dividend's sustainable into the future. Cash flow, dividends per share, consistent growth of dividends per share over time, good strong yield over time, not just a one-off dividend distribution and then they shut down their policy. Good sustained dividend policy over a long period of time. And then that's golden rule 2. And then golden rule 3 is to make sure, it's further sustainability based on the consensus forecasts of those same criteria, and then that qualitative overlay to come up with a list of stocks, and there's around 70 that meet our star stock criteria. And we've got very similar models that we apply to our US growth funds, not available in Stock Doctor yet, but a US model is going to be available in Stock Doctor in the not too distant future. But for our US funds, very similar metrics that we apply here in Australia for our star growth stocks are applied to manage our stocks in our US funds.
Tim, the program is pretty amazing, because as much guidance as you guys give within the program, and you divide the stocks into those 3 categories, there's quite a few tools within the program too, isn't there, that allow people to further enhance that. So like the stock filter, there's really a lot of learning that you can do, and no learning either, if you want to, couldn't you? So you can go in, and I like one of the features in that you can just click in a few details and it'll come up with the stocks for you. And even when you've picked your portfolio, it'll then analyze that and it'll come up with other recommendations as well if you want to add. It's pretty intuitive, really, isn't it?
Yeah, it's come a long way, Ross, from when I look at the old PC-based version of the original Stock Doctor that was distributed on updates on floppy disk, the old 5 1/4, 3.5 inch
Yeah,
floppies. That's how it first started. And
yeah,
it's really just financial health and a couple of golden rule 2 metrics and maybe a help file. But now it's morphed into a total DIY investor's solution. And you're right, there's really two uh, um, user classifications for Stock Doctor. One particular user classification or member classification, I should say, is where they're fairly savvy themselves. They've been investing in the market for a long time. They've got their own rules and criteria. They use Stock Doctor as that qualification platform or due diligence piece that it's just a really valuable part of their holistic toolkit. Then you've got others who may be new to the market or they're not as disciplined or they just need a more prescriptive tool. And that's where Stock Doctor can be one or the other, either a research platform or a very prescriptive tool. And when it comes to either, it's complete. But just zoning in on that prescriptive tool a little bit, yeah, there's full education, whether it be physical or online, around how do I select stocks? How do I construct portfolios? How do I manage portfolios? Yeah, we can go all the way from, what type of investor are you? What are your risk tolerance levels? Here's a group of ideal stocks for you. This is how you consistently manage it through our optimizer, portfolio constructor and optimizer. And then once you get a little bit more down the track, as you touched on, there's stock filters where you can start to dig a little further and find some stocks that aren't yet star stocks, but meet a really defined, strong criteria, and they might be emerging businesses, and they're the sweet fish that we all love to have in our portfolios because they're the ones that shoot the lights out over time. So yeah, there's many ways to use Stock Doctor, but it is very much follow the bouncing ball. And together with we're really client centric. We're really proud of that. That we love the customer. We do everything for the customer. We want to retain the customer. We want referral business, and so that client centricity is critical. But it's genuine. It's there to educate. We've got a very much an academic background with Dad's original work, so we maintain that heritage. Really important. So yeah, we want it to evolve into the complete global tool. So Dad's mission and my mission was always to help as many people as broad and wide as we can to avoid corporate disaster and invest in the market with confidence and control. And hey, if we can take Dad's original work to the world, then that would be very, very, very cool. And I know we'd be looking down, going, "Wow, we certainly achieved our mission by helping people." And back to the athletics whole thing, the entertainment to entertain for athletes, to bring joy to people's lives and whatnot. We're hopefully doing the same with the stock market. There can be a bit of a beast of an asset class. There's it's an asset class that is questioned by a lot, but with the right tools and approach, that's a beautiful asset class and can create serious prosperity over the long term by those who are disciplined.
Do you and your team still are you still bemused sometimes at the sensationalism and the people losing their heads and all the ridiculous headlines you see? And I'll put my hand up. I've been a Stock Doctor member now for 6 years, and some of my best performing stocks, you never even see them spoken about on the news. I don't know whether it's because they're not the flavor of the month or they don't have a mass appeal, but they're companies that I would never have heard of had I not done Stock Doctor.
Yeah.
Pro Medicus, Jumbo Interactive.
Yeah. Yeah, and you look at their numbers, Ross, and they're obvious, aren't they? When you see their financial health and their growth metrics, and in Jumbo's case, their growth and income metrics, it's just like it's a no-brainer. But yeah, your brokers and others aren't going to be recommending these stocks because they haven't got the, I don't know what it is, the quantitative ability to be able to screen these stocks in based on a really sound, consistent approach and methodology. So you're right, Ross. They're the little ones that turbocharge, but realistic expectations as well. We've got to have realistic expectations. We'll only, through the course of the life of a portfolio, you'll only probably get 60% right. So you're going to get 40% wrong, where share price is actually below what you bought it for when you sell it. So, but the ones that you get right will do so much better than over the long term than than the ones you get wrong, because you're going to cut those out or the fundamentals have changed, so they'll be removed. You might get a couple that you'll question the methodology because it's 50% down from when you bought it, but that's only one stock in ideally a 15 plus stock portfolio. So you can't let that one destroy your confidence in a methodology. You've got to look at the what the other contributors are doing. But yeah, to have realistic expectations is really important. 60% right most of the time, and just accept that and move on. But to your question too about the noise, the influence that can occur, we block it out. You know, we're bottom-up stock pickers. So we just look at the fundamental quality or the quantitative quality based on data of the stock. And that's what we base it on. We do look at some macro influences relative to the company in that qualitative overlay I spoke about earlier, for sure. And our factors and models that we look at, sure, relative to the company and the sector they operate in, we've got to look at nuances. And some of that might be macro influences, rising interest rates, etc. So yeah, that's there. But everything else, the geopolitical risk, everything else, you've got to block it out. You can't let that influence the management of your portfolio that you remain committed to for the long term. You don't want to be flip-flopping in and out relative to the noise, because that will just destroy the long-term performance and the long-term objective of creating prosperity through this asset class, because there'll always be noise. They'll always, and especially the opinion from a friend or the taxi driver or
the whisper stock.
Oh yeah, it's just, well, the whisper stock, great, but qualify the whisper. Qualify the whisper and pull out Stock Doctor on your mobile device. It might be at the golf club, having a lemon squash after a round, and you know Joe recommends or Betty recommends the XYZ stock, and you pull out your phone and go, "Oh no, it's a garbage stock. It's high risk, but doesn't mean you can't have a specky in your portfolio at the same time. You might still do that, but so long as it's only a really small exposure. But yeah, it just allows you to qualify the whisper."
So to use a football analogy, we'll talk about that shortly, but chess marks, no speckies. Best to take chess marks consistently as opposed to the specky.
Very good, like it. And it's even got a strong relationship there with terminology too. Nice work. Yeah.
So let's have a look at the current environment. Interest rates are heading in the the direction people don't want. So stocks are falling out a little bit of favor. Is this where the methodology that you guys have really comes in? And to quote Warren Buffett, when everyone's running out of the burning building, this is the time to run in?
Yeah. When others are fearful, be greedy. When others are greedy, be fearful. Yeah, all of that for sure. When it's been from a growth investing perspective, small to mid-cap stocks, post-COVID, I've never known such an extended period where it's been really tough for that particular cycle of stock. You've been there for 6 years, so you know that you know there's a lot of high-quality businesses that have been unloved through that period. It's really only been the big miners and the banks through those 3 years that have, both here and in the US and globally, really propped up markets. So it's quite artificial. Everything else has been they've really struggled, including our style of identifying stocks. So we've had to remain so strong and resilient. Don't deviate from the methodology. We always look to constantly improve, but don't deviate. And because we know that cycle and time and the sun will come for us again. And with all of the war and the geopolitical risks that's happening around the world again, you know, it's big, it's major now for sure, but there's always, as I said before, there's always something, but we simply can't deviate. And now in a rising interest rate environment, we've been in this environment now for a couple of years. It's impacted obviously on that style. That's been the major impact, because equities are unloved in a rising interest rate, rising inflationary environment. But we still have to remain strong. But thing in this now that we believe that the equity markets are in for probably more volatility over the next 6 months or so, as I don't think that the impact of these rising interest rates have really truly bitten yet. There's always that really large lag factor, and we haven't experienced it yet, Ross. You know, I've late 80s a little bit, but we haven't experienced the high interest rate environment. So it's a brand new world. So but it has to bite the bottom line of companies. So if we start to see, and we already are seeing, increased level of insolvencies, company failures, which will lead to higher unemployment and other bits and pieces, that's going to cause more volatility in the market if it occurs. Mm. So right now, it's the first time I've ever done it. We've got 30% of the portfolio hedged in a bear ETF. So based on that probability piece, if the market does correct, then we stand to do really well in our portfolios. So I'm not, for the first time ever, I'm not purely long only. I'm actually betting on a probability that there's more volatility. If we get it wrong, it doesn't matter because we've just neutralized performance. It just means that we won't benefit enormously. If the market goes against probability and runs hard, it just means that we won't enjoy all of that. But if it does fall, we don't fall. And the minute interest rates look like they've peaked and going to come down, and inflation's under control and insolvency have occurred, now if this lag effect doesn't kick in, then we move back to 100%. So we are listening to a little bit of the geopolitical stuff at the moment, but only a little bit of that. It's more about this lag effect and the effect that interest rates could have on the financial health of companies in the not too distant future.
So the principle of time in the market, not timing of the market. This is a real tester at the moment. Stick it out.
Even though we have introduced a bit of a timing element, but it's not. It's purely based on probability.
Okay.
A probability of the lag effect that a higher interest rate environment will have on companies who are so used to virtually zero interest rates and no cost of debt. If they haven't planned for that, then they're going to be in trouble, as consumers will be if they've borrowed too much for their mortgage. They're going to be in trouble. And then if you see some unemployment rates start to increase, what effect does that truly have on the overall economy?
So 4,000 members for Stock Doctor. You guys have changed quite a few self-managed superannuation people's lives, haven't you, with your program?
Yeah, we look. All I can base it on is the feedback we receive, real feedback we receive from a lot of our members and testimonials, and a lot of the testimonials suggest that I can retire forever. I can retire comfortably. You've allowed me to do that. That's a really consistent theme.
I'll give you a testimonial. I was introduced to Stock Doctor by my mother-in-law, who's been a member for well over 20 years.
Fantastic.
Their lifestyle and what they're doing is because of their investment via Stock Doctor.
Ross, what's mum's name?
Raisbeck, Katie Raisbeck.
Of course. Well, thank Katie, and please pass on my gratitude and regards.
Yeah.
But it is a consistent theme, and one that obviously we're super proud of. But it's just based on common sense theory and philosophies, isn't it? You wouldn't why would you invest in something that wasn't quality? And to provide that peace of mind, and again, back to probability, the probability of that being an attractive investment, being a quality stock, and it doing well over time, the probability of that is high. So then if that happens, then it's going to lead to long-term prosperity for which your mum is enjoying at the moment. So but again, you've got to be strong through when cycles go against you, and they do in the market. That's when you have to be resilient and strong and just focus on the longer term and get through it, knowing that the cycle will turn.
So everyone's enjoyed a dabble in the stock market, haven't they, in the past? But unless you're using something like Stock Doctor, it really is a gamble, isn't it? Because as you say, you're listening to someone in a pub or a recommendation in a taxi ride. But as you say, they're not giving you the full picture of that company.
Yeah. Well, the general perception of the share market is that it's a high risk asset class. And it's probably true, because 1,700 of Australian listed stocks, 75% that works out to be, similarly in the US, 75% of US stocks are high risk. They're walking a financial tightrope. They're at serious risk of failure. They won't all fail because they just go and raise more capital and another lifeline's provided. So they don't necessarily fail, but their share prices don't do much either.
Yeah.
but a chunk do fail. So it's perceived to be a risky asset class. And that's because most of the tips are in those garbage stocks.
Mm.
And they might only invest in two of them, and that's it. Their perception is then confirmed, and they're off for, never to return, but they'll go and have bet on the horses or go to the casino. So again, that's the beauty of Stock Doctor, is to qualify those recommendations, really just bring it back to those companies that are profitable, got manageable cash flow levels, got manageable debt levels, and they've got great leaders behind them, and they're either growing or got sustainable dividend policy. Simple stuff. Construct a portfolio of 15 of those stocks and remain true to that methodology and discipline and philosophy, then you should do okay in the long run. But yeah, it's a bit of a minefield and a perception out there that the market isn't truly what it is.
How important for you are dividends from a company?
Not for me personally at the moment, because I still believe I'm in the growth phase of my life. It's a bonus. If I invest in like Jumbo, good example. If you invest in them for growth, then you got the bonus of a beautiful yield as well. But it just depends on stage of life and risk tolerance. I mean, so stage of life, if you really need from the market a good consistent income stream, then investing in high quality, generally larger cap listed stocks is a really good way to go to complement your requirement for your lifestyle in retirement, nearing retirement, in retirement. But also if you're really risk averse and you can't stand the volatility associated with small to mid cap stocks, then perhaps building a defensive portfolio, again, large cap, high yielding business is a really good way to go too. So for me personally, no, not at the moment. Will be possibly at some stage in the future when I near retirement or in retirement, yielding stocks, but definitely for those that rely on that good, reliable income stream.
We talk about cycles. Are the Lincoln family in a cycle at the moment? If we were to look at, say, the running into the business, back into another sport now, being the Carlton Football Club?
Oh, well, the Carlton family are certain. We've always been there, Sarah, my wife, and kids were all very, very passionate Carlton fans. So that's certainly not a flippant cycle. That's remained true for a very, very long period, ever since I was a tiny, tiny little fella. I know, Ross, you're deeply passionate as well. So yeah, we grew up with that. So that, but I think as far as the footy club goes, yeah, it's a great place to be now. And I think all successful organisations have got to be great places to be, and that's driven by culture and strong leadership and a really deep, genuine desire to be the very best, but go about that in a really fun way. So yeah, I reckon it is. It's a nice cycle shift from where we were as an organisation.
Tim, could you actually explain to the listeners, you're not just wearing a scarf going every week. What else are you doing with Carlton Football Club?
Yeah, I love wearing the scarf. With Sarah and the kids, and getting out there with the public and the members with the scarf on, jeans on, and 4 and 20 pie in the hand. I'm getting there and barracking hard. We love that. But yeah, also on the board, also really privileged to be a director of the mighty Carlton Footy Club. So yeah, I've been there for a little over 2 years now, and really exciting. Had to be heavily involved in the recruitment of Michael Voss to get the very right person, the very right leader for our footy club. And and just by making, I think previous leadership at the club was really, really good too. It's just that we had to go through some change culturally to really get that unity piece in, and I've played a big role in that, which I'm with others, just not me, of course. I mean, I apply a lot of the data analytics and to list management and help out with technology. I'm a director of data analytics and technology and innovation there. So that's played a key role in unifying the club. And Yeah, so very, very privileged, and yeah, to be a deeply passionate supporter, always dreamed of pulling on that jumper as a kid, to now have found my way into this particular role is a life privilege. Yeah.
How much of your time does the director role take up?
A bit less now. We, as you know, Ross, 2 years ago, I walked into there was a fire pit.
Mm-hmm.
The place was real, faced with enormous challenges.
Mm.
And so back then, it was 20, 30 hours a week, and doing all the data analytics and whatnot, 20, 30 hours a week, I suppose.
Mm.
But now it's probably closer to 10, 15.
Yep.
I'd say that's including the data analytics again, and board time, and reading your board papers, and attending functions and other bits and pieces. So yeah, 10 to 15 at the moment, which is good. But again, it's a deep passion, Ross, and as long as you've got the balance in life right between, families first, obviously health and fitness is second, business third, Carlton Footy Club fourth. So as long as I got the balance right across those four key pillars in my life, then it's okay. And yeah, everything's nicely balanced as it is. So it's good. Mm.
So Lincoln Indicators, Stock Doctor, Carlton Football Club. How does Tim Lincoln stay refreshed? What activities does he participate in? What me time do you participate in? What do you do?
Yeah, family time is crucial. Space is crucial to me. Family time, and just getting, as we spoke about before we came on air, to be able to immerse myself in my really strong or conducive environments to that space is critical. I've got a beautiful lifestyle, so I'm able to do that. I love golf, love tennis, love the garden, love nature, love my pet dog Reuben. He's just my best friend. He's third generation, so three of them have been really important parts of my life. I do a lot of extreme stuff as well, and haven't for a few years now, but maybe I've got another one or two of them in me. But done things like Kokoda, Zambezi River, Grand Canyon, Colorado River, days through there in tranquil, extreme environments, but lovely. Done 2 full Ironman events, run 4 marathons. And to pack all the training required and preparation required for those sort of things, together with all the other bits and pieces that are going on. Again, that's the challenge, and the thing that makes me most proud is to be able to compartmentalize and do all, and be happy at the same time. And it's great. Yeah, so they're the sort of things, and I think healthy mind, or healthy body, healthy mind. So that's all important. Hence why health and fitness is my second pillar in life, is to do all of the things. You got to be healthy and happy. Mm.
Who was your mentor, or who is your mentor?
I've had life coaches along the way, but not for many years now. When I first started, I needed it because I was, as I said before, go from computer geek to entrepreneur, and what does that mean? And the more I discovered this entrepreneurial, or the challenge associated with entrepreneurship, that's where the importance of life balance came in. So I had a couple of life coaches early. Dad was a great mentor, of course, but he unfortunately was diagnosed with Alzheimer's in 2001. So I didn't have that long with Dad, even though it was a long, drawn-out illness. He wasn't able to help me. So that's when I had to tread my own path a fair bit after him. And then, just others like, Warren Buffett, Benjamin Graham, obviously, not personal mentors. Then life, Anthony Robbins, unbelievable. Now, more recently, I've really embraced Buddhism. Not that I'm Buddhist, but I believe in a lot of the philosophies from the faith, and other things like gene analysis, and just things, and Richard Rudd, and others associated with gene key assessment, which is all DNA assessment and genes, but a little bit more the spiritual side as well, just to understand, the influences of the universe, and And I'll start to sound wacky when I
No, no,
start
not
to
at all.
delve into that too deeply. But I've
Yeah.
got a really, really strong fascination with all of that, and a lot of the ancient philosophies. It just makes so much sense to me, and it's just like, wow, isn't this cool? And so yeah, all of that. So that's what helps create the balance and keep me really energized and stimulated.
One final question, the most important question. Will Patrick Cripps and Michael Voss be holding up the Premiership Cup in the coming year?
In the coming year, I reckon we're a chance, Ross.
Mm,
I mean, we do believe
mm,
we can.
mm,
That's the exciting bit. We do believe we can. It's a tough
mm,
competition. It's really, as you know, it's even. So what's your point of difference?
mm,
And I
mm.
think with some of our points of difference, I think our culture's got to be. I mean, everyone strives to have a great culture, but how is yours stronger than everyone else's? And I just think based on our fan base, our hunger for success, um, who we are, our brand, our jumper. We got a lot of momentum. We got a lot of real positive energy pushing the mighty Blues and its culture, and so I think there's a lot there. I think we've got a great leadership team in Cripper and the leaders around him. We've got the spread of youth through the list, beautiful now. Really good representative balance of role, depth of role, age profile through role, leadership role on field. I think we've got great leadership off field. I think with Fossey and the coaching group, really good people, hard but fair, been there, done that. So that real inspirational piece and accountability piece is there amongst the coaches. The club is great. I think Brian Cook and Luke Sayers and the board, all of the execs, they're all passionate. They want it as well. So culturally, the hunger, so everything's there from that perspective. I think the list management's really good. A little bit biased there at that particular comment, but I think we've really got our list. The list has still got. We still can improve there, so that's exciting. See what happens in the draft coming up soon. So yeah, we believe we can. We'll be aspiring to be top four next year, but injuries can play a role. We've got really good high performance disciplines in there now too. We know who's at risk of soft tissue. We've done a lot of work there. So yeah, back to probability, Ross. If the stars align, and back to a little bit of the old spiritual piece of the universe playing a role. If the stars align, then we're a chance. We're a chance. And I think, but maybe not next year. If it's not next year, we're building a model that's truly sustainable.
Mm.
And we want to be competitive every single year. And I think you can do that if you maintain those things that I've just mentioned, especially that cultural and leadership piece and the list management piece and prevention of injury. If we get that right and really remain committed to that, then a sustainable model in an incredibly even environment and competition is possible.
Well, absolutely. I mean, you only have to look at Sydney, don't you, over the last 20 years? There's a club it's lost some grand finals, but it's won some grand finals. But geez, they're up there every year, aren't they? And you look at what they've just done. Yeah, Geelong. Yeah.
Sydney, Hawthorn to a lesser extent. Sure, they've dropped off, but they know what they have to do to get back up there quickly.
Yeah.
Yeah. So, yeah, I think it is possible, especially when you've got a brand like ours.
Mm.
A strong brand where there's so much passion. We are a big four. Let's leverage it. And people want to play for Carlton Footy Club.
Yes.
They really want to play for Carlton Footy Club. So, we've got big advantage. There's some of our competitive advantages.
The roar at the Sydney Carlton final, crikey, that was fantastic.
And the Carlton Melbourne.
Yeah.
Even the Brisbane game, when they came out, and the most pleasing thing out of the final series wasn't the loss against Brisbane. Don't get me wrong. But when the players gathered in front of Vossi when they were coming off the field after being beaten, and the crowd were all still there, and every standing ovation, the noise, the positive noise that came from that was just, yeah, you couldn't help but digest it and take a dose of it, and then that inspirational contribution already at that point in time for next season. It was just incredible, Ross. But you're right, the positive, the joy that was delivered to people's lives last year was just so rewarding and outstanding.
I think as one, if the players can be inspired, all they have to look at is some of Michael Voss's highlights tapes, and he can back up what he's advising, can't he?
Well, that's right. When Vossi looks at you in the eye, or the players in the eye, they can't not say that this bloke doesn't know how to go about winning a premiership for our footy club. You know, he's an incredibly and humble. He's inspirational, yet the humility that flows from Vossi, he's so down to earth and so approachable. You just never know. So same with Greg Williams, even though Diesel sort of plays with the observation that he may have an ego. He's not. They're the most humble, down to earth people. Stephen Kerner, the club is. It's based on humility and hard work, and Vossi certainly oozes that. And he grew up a Carlton supporter.
Oh, really?
He grew up a very passionate Carlton supporter and stood many Saturday afternoons on the wing there at Princess Park or Icon Park with his grandfather barracking for the Mighty Blues. So he's wrapped to be back. He now certainly calls himself a Carlton man. That's a big positive too.
Tim, the legacy that your father started and that you have continued on, and I know that you are mentoring others. You are extraordinary, and you are from an extraordinary family. You certainly have an extraordinary father. Thank you for joining the Bare Facts today. We really appreciate it. And thank you for all the contributions your family have made to both the business and the sporting world.
Oh, Ross, beautiful words. Thank you, mate. And really, really grateful for what you've just said. You don't hear it very often, but when you do, it certainly resonates. So thank you for allowing me to have the chat and share with you some great memories in life, some great disciplines, and look forward to the future and hopefully a Mighty Blues flag. Wouldn't that be lovely? But thanks, Ross. Really appreciate those words. Thank you.
Thank you, Tim.